course, for our markets, once again, it seems like we're headed in for a negative start. The Gift Nifty, of course, is under pressure. We're down about, in fact, 250 points on the implied open. But Kunal is here in the studios. Kunal, hi, morning. Quite a few talking points from yesterday. While, of course, the index got pegged back about 200 odd points. I guess the sensitivity to Brent, I mean, the minute you had that dash to 100, you saw the market cave in.
Correct. Even yesterday, you saw the markets a little bit jittery because in the second half, when the crude managed to sustain about the $100 per barrel mark, we saw the Nifty, the rupee also. I think we were, over the last, I think 1 week, we've done the hard work to try and fall back or maybe rise from 94.5 levels to 92.5 at one point of time. But then to try and come back to 93.7, I think that itself indicates that the markets were feeling a little bit of jitteriness back again, and I think that's not positive. Because when you're at a point when you're just about to break one of the major resistance barriers, 24,500 to 25,000 mark on the Nifty, you would need strong support which is emerging from variety of sectors and market breadth, etc. But that I think would probably now again indicates that it'll take some time for the markets to come back into the repair mode and trying to surpass this major resistance point. The other problem for the market was the Nifty IT index, which was seen yesterday. Names like HCL Tech down 10%, Infosys 2.5% down, etc. I think those are sharp and deep gashes for this sector. So we were as it is struggling with few large cap names, and now this sector adds on to the more pain for the markets.
Kunal, if you look at the kind of open interest build-up that happened yesterday, we saw a lot of call writing happening in the second half, which led to the index falling below 24,400 mark. But if you look at the rollovers also, in the April, Nifty 50 futures, we saw around 700 crores unwind happening. But in the May, we had nearly 1,400 crores of new positions getting added. Correct. So more shorts getting added going into May as we speak.
Yeah, so I think on both fronts. So in fact, yesterday one of the data suggested that there's been an aggressive writing of call options. How do we say aggressive? Because assuming if we closed at 24,300 mark, so 300, 400, 500, the three immediate strikes saw an open interest built up, which was almost 3 times the same three, just slightly out of the money open interest for the put. So that tells you that there was an aggressive amount of call writing which was seen yesterday. For example, just the immediate strike 24,400 saw 48,000 or 49,000 jump in the open interest as compared to the 3 cumulative strikes which added 45,000 on the open interest on the put front. So that tells you that there were more writers for the call options yesterday. It also indicates that the markets participants are now starting to expect that maybe this could act as a ceiling for the near term, 24,500-ish kind of a zone for the Nifty. The other point which you also mentioned, I think, yes, that's critical because over the last 3 days, we've seen that the Nifty futures were seeing some sort of unwinding for the current month. That's, of course, because of the expiry. But yesterday was one of the first signs where you saw open interest rising up for the May series. That is not positive. And if we add that to the impact, what could happen to the premium for the index futures, so generally when there is a huge amount of selling which happens, the premiums shrink or the markets goes into discount. If we add that fact, then I think it's, of course, considered to be not positive.
Kunal, but what's the texture likely to be, given that we will have a weak start today once again and weaker than where we were yesterday? A, will the broader market resilience like yesterday stand through? B, would IT fall a lot more? Would metals also be on the downside? What would the texture be?
See, today I would probably believe could be a day where traders would try and take profits as much as possible, try and just about guard their, mark to market or positions in what they've seen as a recovery in the last 3 or 4 weeks, because they would not want to be succumbing back to the same selling pressure, assuming if things turn out to be worse back again, because the gradual rise which you're seeing in crude oil prices as well as the depreciation in rupee back again will probably hurt the sentiments going forward. And it's a matter of a psychological break. If we break 24,000 mark in terms of a support for the Nifty, if we do, then I think it could probably add to the concerns for traders. So today I think could be an off day, something which we may probably not have seen in the last many days, that you might see some bit of profit booking, the market breadth a little bit on the negative side as compared to the previous days.
And it'll break the Tuesday, Thursday kind of gain, loss, gain kind of trend as well, right?
Yeah, no, it'll be the same. Tuesday also was a day where the markets, I think, were
closed in the red, right?
Mildly. Oh, okay, closed red.
So, and therefore, if today is
mildly red, it was
mildly red. I agree with you. But but that will mean that it will break the Tuesday-Thursday trend as well, if this were to play out, of course.
If this were to play out.
But you're expecting it to play
Yes,
out.
yes,
Your
I
picks for this morning?
So two sell calls. First one is on, of course, the IT pack. Persistent is something which I would believe could be at the brunt of maybe another round of a selling pressure over the near term. We've seen many of these IT stocks showing signs of a sharp retracement or a reversal. So would look out for a near-term target of 5,000 on the stock price. Stop loss could be kept at 5,135. And I've picked up HDFC Bank as a shorting candidate because the expectation is that if the markets go into any kind of a turn on the downside, there could be a higher contribution which could be led by HDFC Bank. So initiating a sell call over here, targets of 785, stop loss to be kept at 812.
Okay.